I roll and rock, rock and roll. I roll and rock, rock and roll. I roll and rock, rock and roll. Kicking up in a brainstorm. I roll and rock, rock and roll. I roll and rock, rock and roll. I roll and rock, rock and roll. Kicking up in a brainstorm. I roll and rock and. Welcome to Apex Investor. I'm not a financial advisor. This is not financial advice. I am simply a dude, simply a guy, regular guy who has really good instincts. So let's look at the volume champions for Friday, last Friday. HCMC is the champ, 3.673 billion volume. It was up 20% as well. SANP was a champion with not only volume 1.56 billion, but was up 116%. The champion of this chart in terms of percent is EYES, Second Sight Medical Products, with over 739 million volume, and it was up 304%. So that's great. All right, let me just pause this. Okay, so we're back. We're at finviz.com. These are the top losers, the stocks that have hit new lows. I'm going to begin with SLGG. It's a stock we recommended on Thursday. And on Thursday, if you recall, it was trading pretty low. Well, not low, but it was lower than, I think it was around $5, $6. On Friday, it jumped up. Thursday, end of Thursday, it jumped up to close to $9 and then went down to $5.90 at the close of trading on Friday. This is only going to go up double digits. I'm predicting this will go up double digits because of the deal that they may have with GameStop. There are rumors that that's going to happen. And regardless, whether that happens or not, the stock is going to be into double digits. The price target we see here is only $5.25. However, you have to keep in mind these people setting the price targets are not, they don't know trends. They don't know trends like I do. Gaming, esports is one of the biggest things that is going on in our world. It's gonna rival actual sports, which to me is ridiculous, but I understand that there's a demand for it. I mean, you have Korea, Japan, esports is massive over there. In parts of America, you have the Evo championships, and that's pretty big. So there is a demand for esports, and I think SLGG will, it's going to reflect this very soon. This is only a sneak peek of what's to come. Just on a rumor, it went up to $9. So what more when actual news comes in? It'll probably go to double digits really easily. So don't be discouraged that this stock went down. It's going to pick up again, especially if they do, if they finalize a deal with GameStop, then you'll see it go up big time. So I think that's all I'm going to say about SLGG, but that's still a good stock. I wouldn't say buy it right now. I would probably wait. If you want to be really, really conservative, buy it at $1, $2, or maybe even $3 or lower. I think it's too high for me to recommend this at the moment, but it's up to you. I mean, that's people's decisions to make. So again, I'm not a financial advisor, not a financial expert, and I'm not giving financial advice out here. I'm only just, shooting my opinion out there. So SLGG is a good stock. Personally, I wouldn't recommend someone to spend their precious money on it at the moment, unless there are more rumors coming on. I don't know, but this is going to go to double digits. So it's, again, up to you. So I'm going to close that tab. Moving on to RMO. This is Romeo Power, an American company that does auto parts. Specifically, I think they do electric vehicle auto parts. So it looks like an EV stock. And let me see, energy storage company. They design, manufacture lithium-ion battery modules. So yeah, in America. So they have Romeo Power North America and joint venture support. They offer battery management systems, design, research, R&D, other engineering related services. Romeo Power was founded in 2014 and is headquartered in Vernon, California. So that sounds pretty good to me. Institutional ownership is only 9%, so that's not too good. uh, just being real with you. 52-week range was 950 to 3890. So right now it's at 968. You could get. I don't think you can get a better deal for this stock. I mean, it opened uh, at at below $10, and it was just floating from pretty much, I'd say, 950 to 1185, and then all of a sudden in December it just shot up like crazy. Uh, you could do a lot worse than this stock. This is a good pick, Romeo Power. So I put my stamp of approval on this one because I can only see this going higher. It's not going to stay down um, for too long, especially if you look at this volume here. Their volume is averages over 6 million is their average volume, and their volume on Friday was over 10 million. This stock is going to go right back up. Uh, we can see that the performance for the week was it's minus 21%. The performance for the month was minus 47%. And just overall, I mean, looking at this big picture, this is going to go at least to $20. At least to 20. It's really safe to save to if you buy the stock right now, I might pick up like a share or two. But if you buy the stock at under $10 and you put your sell price for $20, you're going to double your money pretty easily. Or if you're more patient and just say, let's wait for it to go to 40, you will quadruple your money. So, you know what? I don't think you can go wrong with this stock. It's in a good industry. The EV market is on fire. It's one of the most in demand industries besides cryptocurrency, Bitcoin mining and all that. So RMO is a really good pick. Institutional ownership is a little concerning, but I think I think that'll pick up over time once they see just how promising this company can be. I mean, they're not the next QuantumScape, but they are in a good market. They're American. They're in a good market. They're American. They're in California, and so we've seen it go as recently as almost $40. They've been going to, let's see, $20. They were at $20 for pretty much 3 months. I mean, this isn't going to stay down for too long. So get it while it's hot. This is a good stock, RMO. So moving on. Actually, I should add it to my list. Give me a minute to pause and add this to my list. Okay, so that was RMO. Moving on to the next one. The next top loser for last Friday was Imara, IMRA. This is a biotechnology company based in America. Um, read info about them. They're a clinical stage biopharmaceutical company. They develop and commercialize therapeutics for patients with rare genetic disorders of hemoglobin. It develops IMR 687, which is an oral, once a day therapeutic for the treatment of sickle cell disease and B thalassemia. The company was founded in 2016, is headquartered in Boston, Massachusetts. So it sounds pretty good to me. Let's look at their stats. Their insider ownership is 22%. Institutional ownership is massive at 83.8%. I don't know what trans means. Oh, there it is. Institutional transactions. Okay. So, I mean, wow, this is a strong ownership right there. 83% is really good. Their volume is not too bad. I mean, average volume was 137, but they had almost 5 times that on Friday. And their RSI is oversold. I didn't look at the RSI of the last one. I really should have. Um, let me take a look at that before I continue on. I should go back to Romeo, right? And look at that one again. Okay, so Romeo's RSI was 25.14, so that's oversold. Yeah, like I said, it's a good pick, My only concern is that this is probably the first time it's really been tested. It hasn't dropped down this low and then come back up again. So that's my only concern. But knowing if this is a stock, and it is, it's going to go back up. That's just the law. That's the law of the stock market. Okay, now let's go back to IMRA. Uh, their volume, or not volume, their range was 1185 to 6271. So if you buy this at 997, which is the last price it was trading at, uh, okay, I'm not sure what happened here. I don't really see a line there. Let me take a quick closer look. I don't know if that was a stock split or what. Maybe it is. That would be a big concern to me. Yeah, I'm not sure what happened there. It's a little concerning to me. I'm not sure why there's no like line. Just seemed to go from 23 all the way down to that. So I don't know if it was just bad news or what. So this was on, what day is this? Somewhere in January. Oh, here it is. There's the news. January 5th. So around January 5th, we want to look for something. It says here they reported a phase 2 clinical trial, and I think it was probably negative. So that's most likely why it crashed there. Took a dive, but it wasn't because of a reverse split. That would be my biggest concern. Not bad news. Bad news is good because it can always get better. But a reverse split, you can't just come back and split the other way. So as we can see, I talked about institutional ownership, 52-week range again, 1185 to $62. So even if you buy this at this price, 997, and you see the average volume, I spoke about that already. RSI, it's oversold. Um, if you buy this at 997, you could easily sell it for 28, easily at 20, even 30. Personally, probably set a price for 30. Yeah, right about 29.30. So you would triple your money with IMRA. It's not going to stay down for too long. I mean, it will stay down, but I don't know how long it will stay down. What I'm trying to say is that it won't stay at these prices for too long, below $10. But by the time it goes back to $30, 20, let's look at this. What's that? 28? Yeah, 28, 29 to 30. You could easily sell this for $28 to $30 within the next 6 months. So keep an eye on IMRA. I'm going to add that to my list on the Apex Investor list. So this is a Apex Investor approved stock at this price, Imara. And I might pick up some Romeo and Amara for Monday. But Romeo, I just noticed, is up after hours to $9.95. So it's still under $10. Imara is up to $10. So it's, as you can see, like those are overreactions. It was down in the past month 27%, in the last quarter 62%. So this is seeing a big sell-off, but it's only going to recover, especially if they report good news in the future about their sickle cell uh, therapeutics. Now looking at the weekly chart, take a bigger look at what's going on here. Yeah, as you can see, this is a fire sale. Like you really can't go wrong with this. This is a really, really low risk play. Really good stock at this price. I'm gonna probably pick up one or two just to prove what I'm saying, that this will double or triple. Um, yeah, this is a pretty good stock. It's nice to pick up these stocks at their all-time low. It's really nice. I like that deal. Okay, I'm gonna pause and we'll go to the meme stocks. Okay, welcome back. So GameStop was up $5.39. It closed at 137.74 and was up 4%. Um, this stock can only go up at this point. It's gonna hit 150 this week. We'll see where it goes. It's only going to get squeezed. It's going to get squeezed. I don't know when, but it's happening very soon. It's only going up. There's no more shares for the shorts to short anymore. they're running out. So they just have to face reality, and this is going to go to the moon. So GameStop is looking amazingly well. And let me see the volume. I can't really see what this thing on the top is. That is volume. Okay, so the volume was 30 million, over 30 million. That's pretty good. AMC, which is the silver, GameStop's the gold. AMC was up 2 cents, 0.25%. And what I did the previous day, I did sell half of my shares in AMC and went over to GameStop, and it was one of the best decisions I did because it's up and I'm up. So AMC is still a good stock, and GameStop, both of them are great, but AMC's not as good as GameStop. It's still good, but not as good. But GameStop is just rising much higher day to day, week to week, and we're starting to see a divergence with those two. However, however, as you can see, if you notice, the market saw a sell off last week, particularly I think in the last 2 days, Thursday and Friday, there was quite a bit of a sell off. The market was overall down a little bit. AMC and GameStop were largely unaffected. It's like they didn't care what, their houses were on fire. AMC and GameStop were in a different planet. They're not affected. They're invincible. Not invincible. I want to say immune. They're immune to what's happening in the market, which is really good because the hedge funds, they did it to us. They're the ones that gave them the immunity. So thank you, hedge funds, for doing that. Appreciate that. Didn't think I'd ever say that, but I am saying it. Um, okay, let's look at the other meme stocks. They're okay. Just gonna look at the risers here. Spoke about that one already. All right. Mm, hmm. As you can see, a lot of the stocks were down. Um, hmm. 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 If you ever play the game Dark Souls, it's that guy with the onion head. Hmm. Catalina. What is it? Catalina armor. Oh, here we go. SLGG. I mentioned this already. It's down 33%. I did buy a bunch of shares at just under $7, so I'm a little bit down. But overall, I'm happy with the stock because I know where it's going, and that's up. Okay. All right. I'm going to pause and we'll go to Reddit, WallStreetBets and WSBets.win. I'm going to scan those, see if there's anything worthwhile. If not, I'll just go straight to GME. Okay. Thank you very much. We'll take a little break. Okay. Here's some AMC news from Deadline. New York DMA weekend box office booms 525% in wake of New York City cinemas reopening. So AMC is going to do well. Looks like the movie theaters are opening up. You've got Godzilla versus Kong coming out at the end of the month. That's going to see probably the biggest box office we've seen since Tenet or even before that. So a lot of good news for AMC coming up this month. It could go back to not just double figures, but probably back to $16-20 range. So, and that's what it was trading at normally, even before the memes were happening. So that's good news. We're going to the next one now. Okay, more good news for AMC. We have a 614% box office boom for NYC, and other markets opened on Friday, including Salt Lake City, Dallas, Phoenix, Chicago, Houston, Denver, Minneapolis, Detroit, and Montreal. So that's really great. AMC is just they are gonna go to the moon. It's crazy. And I sold half of my shares and bought GameStop because that one is more promising. So we're gonna go to wsbets.win, see if there's anything worthwhile reading there. Okay, here's a post from WallStreetBets.win. In 2008, Volkswagen became the largest market cap in the world for a single day due to a short squeeze. So for fun, let's assume GameStop can do the same thing. So how much would GameStop's price per share be if they became the largest market cap in the world? Answer, north of 30,000 per share. And that's actually kind of realistic, the 10,000 to 30,000 range. Speculation: of GameStop hit 30,000 per share back in January, the hedge funds would have hypothetically lost upwards of $5 trillion, causing them to go bankrupt and bankrupting many clearinghouses and brokers as well. Yeah, so that's amazing. All right, gonna pause again. All right, let's watch this movie together. It's called Why Does Quadruple Witching Day Affect GameStop? So he's talking about it. It's about 8 minutes long, so let's watch it.
And this is going to be in relation to something that's been on everybody's mind for the past couple of weeks, and that is GME. How does the Quadruple Witching Day relate to GME? We'll also go over how it relates to the market as well. I've gotten a lot of questions about this topic, and I hope this quick video can help explain what it is and why it's significant. In talking about the GME side of things, we'll also be talking about the hedge fund options, and we'll be going over some analysis as well, and how that relates to the Quadruple Witching Day. So stay tuned, and make sure you watch till the end, because this is a video you're not gonna want to miss.
Okay.
Especially if you're invested in GME.
All right, you got me. Get the popcorn out.
Hi, welcome back to the channel. If you're new here, go ahead and press that
goodness.
subscribe button, press that bell icon, and press that like button. We'd love to have you. Financial advisor. Nothing I say or do in my videos is meant to be taken as financial advice, and you should always do your... Back then, we had the term triple witching instead of quadruple witching, and this happened because quadruple witching replaced triple witching days, and so you'll hear these two terms being used interchangeably, specifically by some of the older generation. Anyway, what are quadruple witching days? Well, in their simplest form, they're a day in which stock index futures, stock index options, stock options, and single stock futures expire simultaneously.
Oh,
now,
wow.
when does this happen? It happens on the third Friday
Ooh.
of the following months: March, June, September, and December. In other words, the Quadruple Witching Day is a rare event, and it happens 4 times a year. It happens quarterly. Currently, we're in March, and the third Friday of this month is March 19th, Friday the 19th. So what's the significance?
Okay, so this is what Uncle Bruce has been talking about. March 19th, he's predicting that the squeeze is probably going to happen for GameStop, which is, okay, let me look at the calendar. It is currently the 7th of March. So the 12th would be Friday. So it would be approximately 12 days from now, this quadruple witching day or hour.
Of this, and why is this day important? In its simplest form, what this means is that these days carry with them quite an increase in volume. That doesn't necessarily mean an increase in volatility, although that is inevitable, and I'll be going over some examples later on. There's 2 more sections I want to bring your attention to in this article. First of all, this section here. In 2019, we had a quadruple witching day on March 15th, which was the third Friday of that month. What happened leading up to that day was that we had an increase in market activity. Now, what I want you to understand is that usually the lead up to this day is what causes the highest increase in the market. Looking here, we see that in the week leading up to the Quadruple Witching Friday, the S&P 500 was up 2.9%, while the Nasdaq was up 3.8%. During that week, that was the bulk of the increase, because on the Friday, the S&P was only up 0.5%. Now, how does this all relate to GME? Well, this leads me to my second point right around here. Traders with large short gamma positions are particularly exposed to price movements leading up to the expiration. Arbitrageurs try to take advantage of such abnormal price action, but doing so can also be quite risky. Now, I want to clear the air. The Quadruple Witching Day in itself won't cause GME to squeeze, but when you combine it with a variety of different other catalysts, it's starting to look like a very real possibility. My previous video on GME discussed Reddit user Hates Pixel's endgame GME theory. We saw that a lot of big players are entering the fray. They're seeing the opportunity and they're pouncing on it. We have a bunch of catalysts coming up. Go and give it a watch. I'll also link down some of the interviews he's done with Andrew Mo Money. In addition to that video's catalysts, there are a couple more. We have the next congressional hearing at March 17th. We have a rumor that around March 25th, Ryan Cohen will become the CEO. We have some unconfirmed news that early April, GameStop will issue a shares callback. There's another theory that as we get closer to the XRT rebalance day, GME will be taken out of the ETF. There's a lot of buying pressure, and that's what's causing the price to keep spiking up. That's what we're seeing at the moment. Looking at the chart, GME is quite stagnant around this level. It's in a slight uptrend ever since it had that massive decline, and in my personal opinion, I view that as good news. We have option chains getting bigger and bigger every week, and more and more options become in the money. What I'm expecting to see, in my own personal opinion, is small gamma squeezes. until finally we board the rocket and go to the moon.
Exactly.
There's also one
Yeah.
last piece of information that I haven't heard much about, so I can't give you much details, but
Give it.
essentially there's a rumor going around that GameStop will probably acquire Super League Gaming.
Yep.
I'm not sure about any of the details for this, so don't ask me.
Yeah,
anyway,
it's a
let's
rumor.
move forward and look at the
It's only a
Quadruple
rumor.
Witching Day options. This Reddit user by the name of, I don't even know how to say that, Bus Hacks? Yeah, Bus Hacks, made this very useful post. Let's have a look. We're comparing March 12th with March 19th, 7 days apart. Let's have a look. Comparing Tesla, the open interest is relatively low when we compare it to March 19th. A strike price of 1,000 has an open interest of 31,194, whereas a strike price of 910, the highest on March 12th, has an open interest of 2,185. Now this trend is seen across multiple companies. Let's have a look at Apple. Apple is similar. The open interest is far greater on March 19th than it is on March 12th. Moving on to Walmart. Some of these less, let's say, popular stocks. The same trend follows. March 19th outweighs March 12th heavily. Moving on to some of these popular meme stocks as well, such as AMC, also follow this trend. March 12th, March 19th. The open interest is leagues ahead on March 19th.
Wow.
BlackBerry, same trend applies. Nokia, same trend applies. And then we get to
Nokia.
GME.
You mean Nokia?
On March 19th, GME, at a strike price of 800, has an open interest of 19,594, whereas on March 12th, it has an open interest of 4,057, and then all the other strike prices are in the hundreds. On March 19th, all the other strike prices are in the thousands. And what this means is that there's an implied volatility at a strike price of 800 of 446%. Let's have a look at the final notes this Reddit user leaves us with. It can be argued that those on Reddit, those on WallStreetBets, are literally in the right place at the right time. But what does it all mean? Well, as this Reddit user states, some of these stocks in index funds and ETFs might need to be recalibrated. And like I said before, GME has a massive chance that it might need to be recalibrated in the XRT ETF. What this does is that it creates a lot of buying and selling, which exasperates the volatility further. And the more volatility, the more market makers have to hedge. And so in general, what he's saying is that this could be a historical ride, especially if you hold. And his final note is that something big is going to happen leading up to March 19th. And in short, I do agree with him. I'll link the post down below so you can have a read of your own. My brief opinions on this. If the price were to squeeze up to 800 to 820, that would be approximately a $56 billion market cap for GME. Hence, the net calls and the money would exceed the float. That's insane. They shorted more than 100% of the stock. So even if they covered the calls on the way up, it's not possible to cover more than 100% of the float. What this would cause would be 8 million shares that would become in the money. That would create a gamma squeeze.
Wow.
And this could cause the short squeeze. Anyway, this has been a quick video explaining the Quadruple Witching Day that's coming up. We've got a Patreon down below.
Okay, so thank you for this video, whoever this guy is. Appreciate that. Grow to attain. So please check that person's channel out. Persons. And subscribe to them. Appreciate that video very much. Yeah, I actually put a sell price for my AMC shares at $9 because I want to just get into GameStop before it hits the moon. So I know that AMC is having brighter days. They have brighter days ahead, but I don't think that the short squeeze that AMC will experience will be as massive as the GameStop short squeeze. They're both going to go through short squeezes. However, GameStop's is going to, thousands of dollars, tens of thousands, whereas AMC will probably stay in triple digits. It won't get to the thousands, but it's still good. But anyway, I want to make more money with GameStop. So, but both companies are great, and I'm going to stick with both of them over any other stocks in the market. AMC and GameStop, it's all about them right now. So let's go to Reddit, subreddit GME, the best place to go, right? So right away, the second post says a tweet from Will Mead, whoever that is. Ryan Cohen built Chewy into a multi-billion e-commerce company. I have no doubt he will make GameStop into a leading e-commerce company as well. I don't play the odds. I bet on the man. Cohen is the man. Okay, there's an ad. All right, I'm going to pause it and just get the best of GME. Here's an interesting post. It says here, the market is regulating itself because the big fish, know the government isn't going to be able to bail them out this time if GameStop goes light speed. So that's a, yeah, that could possibly happen. So here's the new memo. 500K is the new bottom. Um, I've heard, 1,000 and then 10,000, 100,000. It's actually 500,000. That's the new memo now being passed around on GME, subreddit GME. Okay, I've got an Instagram if you'd like to add me there, at Real Apex Investor right there. I'm getting a lot of ads. I don't know why. People are following me. So I figured, hey, why don't I add it to one of my videos, see if that helps out, because it's just snowballing like crazy. And I didn't advertise or even post on Instagram. So I'm just amazed at all the love. So thank you very much. Here's a interesting post. I just like the guy's attitude. It says here, when this is over, I'm still going to eat cold pizza from Costco and drive my Forerunner because cold Costco pizza is delicious and my Forerunner is the most useful and convenient car to have where I live. So I appreciate that. I appreciate that attitude and that perspective on life that, just because you have, a lot of money doesn't mean you're going to change up, the way you live. I'm not saying you're not going to live better, but I'm also saying that we also can appreciate the simple things in life. Okay, this post says, I have a feeling they're going to do a fake out squeeze, bring it up to 1,000 or even 5,000, then do everything in their power to drop it down to make people think that's the squeeze. And then he says, I bet the real diamond hand to hold the real diamond hands are going to get that 10,000, 100,000 prices. But that's a theory, that could happen. But again, I feel like a lot of people are going to look at the squeeze, whatever gamma or short squeeze, whatever it is, going to look at the price and they're going to say, okay, it's reached a peak and now it's starting to drop, and then you're going to see a bit of a sell off. So I think that's going to happen no matter what. GameStop is sending coded messages. It's gonna be a good week. Okay, I'm not sure what that means, and it's Mario Day. So okay, I don't get it. I'm just stupid. What are they saying? I don't. Oh man, I don't get it, man. Oh, can someone comment in the comments section below? Tell me what they're saying here. It's gonna be a good week. Oh, they're talking about the stock market. Okay. Oh boy. All right. Well, hopefully that's what they're talking about. That would be interesting if that's what they were talking about. Okay, this one did not work for whatever reason. So be adamant. Some reminders for us for managing behavior during a short squeeze. So he's taking a break from stats. Here's my weekend pep talk. So here's a disclaimer. Forget and reset your baseline for possibility so you do not doubt how high this can go. Develop an understanding of the opponent's tactics. Clarify your stance between fear and greed. Remain composed in the event of a squeeze by recognizing three phases. Okay, so his intro is quite long. I'm not going to read that all. So the following parts: resetting your baseline, recognizing the dynamics of tension, understanding their position and tactics. I don't know. I just, the highs and lows. I think that's all we need to know, really. 100,000 is a serious price tag for a single share. Could a single share really reach whatever? And yeah, it can. We've seen Tesla do it, and we almost made it to 1,000 if it wasn't for that halt. And they manipulated the stock, and Robinhood banned it from being traded, or I should say, being bought. Okay, what's he even talking about anymore? It's getting too psychological for me. I think the price is psychological. That's what we need to remember. Let's read the end here. Okay, the final part is the approach called the initial, middle, final shout. Okay, all right. What is he even saying? That was too long. This is the way of the way. Okay. All right, dude. Whatever. Basically, hold. Can you just hold? It's gonna go high. Set your price and watch for the peak, and then sell when it starts dropping. Beware new shill strategy spreading. They push the we agenda. So this is important. I've noticed this weekend massive shill accounts pushing the we agenda. They want to gather evidence that we're manipulating the stock, and we are not doing that. We're just making our own choices. Um, we all do what we want to do. It's not about, hey, you're gonna do this, okay, I'll do that too. No, we're not like that. We are about talking to each other, but we're not about like a hive mind kind of thing. So that's something important. We just like the stock, um, and we buy when we want. We sell when we want. Some people buy $50 or 60, like I did at 60, and some people buy at 45. And those are really smart people. And some people bought at 390, and I also bought it at 390. So there you go. Okay, reminder: sell on the way down, not on the way up. So we're gonna end with this one. Now I know we hate talking about selling our beloved diamond hands, but the reality is we will exit our positions during the squeeze. So here's some thoughts. If we simplify our squeeze to an upside down V and the decline on the right or decline, is better to sell on the right side of the curve on the way down. Why? There are three reasons that I can think of. You can make more bananas because we realistically, we don't know how high the price will go. Oh my goodness, why did that do that? We don't know how high the price will go. It can be 5,000, it can be 10,000, 100, 500,000. And you don't, oh my goodness, I can't read that. It's being blocked by my Zoom thing here. You don't want to sell early. It's impossible to time the squeeze to sell at the very top. You can start selling as the momentum starts deflating and cash out near the top, or at least closer to the top than you could have if you sold on the way up with no idea how much higher the price could go. The flip side, you don't want to panic, sell too early. Yeah, I mean, you know what? This could be a very interesting thing because, like one poster said, and I could see this happening, that stock will go 1,000 and it'll dip. It's gonna dip like to 500. People will always know that's the dip. Oh, that's it. That's the squeeze. It's over. But again, there could be manipulation. So you're gonna have to stay strong. Want to stay strong. You're gonna want to see through the BS, if I could put it that way. You want to look through the lies that it's not being sold, and the hedge funds, the short sellers, are manipulating it once again. Okay, less selling on the way up equals more rocketing for harder squeeze. This takes me to my next point. You can recoup your initial investment without affecting the momentum. As the stock price appreciates during the squeeze, some of us are planning on recouping our initial investment and let the rest go to the moon. This is a great way to prevent losing what we put in and play with house money, but you can also do that on the way down. Remember, the squeeze will last for days, if not weeks. Yeah, you'll have plenty of time to recoup your initial investment. You know what? This could work and this cannot work as well. So, um, yeah, here we go. I won't be selling immediately after the price starts slipping because that could be a hedge fund tactic to get us to pay per hand our shares. My realistic goal is to sell at 70 to 80% of the peak. This accounts for some buffer and wait time to see if the price dip is artificial or an actual downward trend. So the big question is, okay, let me ask my question first before I continue. And let me take a sip before I ask my question. So my question is, my question is this: will the short sellers be able to bring the price down from $1,000 or whatever, 5,000, 10,000, all the way down to 500 or less? Is that even possible? or are they going to continue to bleed and just it's going to take off like a rocket ship? I mean, that's probably one of the biggest questions, but I guess time will tell. I think that's the answer. Time will tell. We really don't know, because if they try to short it, like say they're being, idiotic, and they see the price 1,000, and they're saying, "Oh yeah, that's the number, 1,000." So they start to, you know, have short positions. They shorted at 1,000, thinking it'll go to 500. And you know what? It probably will dip. I believe it will dip from 1,000 to, I don't know, go down to 900, 800, 700. I don't know, because there's going to be, as much as we want to hold, there's going to be a sell off because some people are just, they're just that desperate. However, what's going to happen is that that sell off is going to end, and you're going to see a lot more people either just continuing to hold. Um, that's why they say, don't sell, just hold, because if we do sell, you're going to prevent the squeeze from happening, big time, like 10,000, 100,000, 500,000. So that's why it's important that we do that. However, with the hedge funds, knowing that they're not just taking the short position, but also the long position, they can make it seem like people are buying and selling when in reality it's not the retail investors doing that. It's the hedge funds pretending to be uh, just like with the short laddering kind of tactic. But I think it's going to be a little obvious when they start, selling, buying and selling from, $1,000, and then they're selling it at 999, and then buying it again at 998, and just driving it down, short laddering basically. How do I figure out the squeeze has actually squoze so I can sell on the way down? If I could tell you that, I'd be the richest person. There are some assumptions. First, I'd expect volatility to be less on the way down than on the way up. On the way up, there will likely be many price swings. I'd expect the way down to be smoother, but that's just my guess. Second, I plan on keeping an eye on the RSI indicator. You can find out more about it here. That's a good point. The RSI will show you if it's overbought, oversold. Hopefully, taking into account a few indicators can help me better time it. Again, just take it with a grain of salt. A few people are bringing up a good point about it being difficult to sell GameStop once the hedge funds have closed out their shorts. Who would who would one who would sell their GameStop? Who would we sell it to on the way back down? I'm sure there will be a crazy frenzy around GameStop, several order of magnitudes higher than what we saw in January. There will be buyers, but how many is the question. I would love for someone. Okay, so the answer to this is we don't have to wait for people to buy. The hedge funds have to cover it. Whether they like it or not, they have to pay up. So it's not a matter of, oh, are there going to be new buyers? No, the reality is the hedge funds have to cover the shorts. And if it's 500,000 per share, they have to pay that. It's not a choice. They don't have a choice in the matter. They have to pay it. Okay, let's look at that. Okay, those are the comments. So again, yeah, the price is psychological. Let me just pause and open up the GameStop. Okay, so if you look at this chart of GameStop, um, we know that this price of 482 or just under $500 is not the actual price. This is the manipulated price. This was only cut short uh, from where it should have been, which was at least 500 to as much as 1,000. So we know the actual resistance isn't 482. So if we see people selling it off at 482, that's because it was halted. But we can, at the same time, we can expect something of a sell off at around $500, and maybe a drop to, again, this resistance. It really looks like the resistance is $500. So I'm not gonna be memes right here and all of these ape, stuff like that. It's gonna be realistic. Like, gonna be real with you. People will sell off at $500. It's inevitable, and then it will drop down to probably 250. Looking at the historical chart, and then if they're if they can't control this beast, it's gonna go back up to 500 and probably go to 1,000, and then it'll drop again. We'll see where the support is. We'll see if people buy up, at Maybe they'll buy it higher. Maybe the support will go up to 500. I don't know. I mean, we'll see what happens with that. I mean, looking at, I mean, this chart right here, we can see the real support really is 45 to 50. That's true support. But we're going to see in the next coming weeks and months ahead that we're going to look at support that is temporary support or new support levels. For example, if we look at the last, uh, was this the last couple of weeks or so, you can see that the resistance here was around 200. However, this has been manipulated. This isn't really a peak. That's not resistance at all. Just like the level under $500 was not resistance at all. Whereas this level of support at what is this number here? Looks like around 80, $90. That really is support. That's true support. But the resistance, I mean, the good news is, okay, the bad news is this. The bad news is we really don't know. We don't know what the resistance is, but that's also good news because it can only go higher. But the good news is we know what the support level is, which is between 45 to 80, 90. So, I mean, that's a really good level to buy back again. However, uh, because it's setting new levels, it's not going down anymore. This stock is not going down anymore. We're seeing that it's not going down. It's not going down to 80, 80, 90 anymore. It's only going up and it's going up. It's like a stairway to heaven. It's just it's going to go to 1,000. It's going to keep squeezing and squeezing. You know, we're going to see smaller. We're going to see little gamma squeezes. We're going to end up seeing a short squeeze to God knows where. You know, 1,000, 10,000, 100,000. The sky's the limit. It can go all the way to a million. I mean, we really don't know until it reaches that point. And then when it does reach that point, you're going to see a sell off. And just like we saw about 2 months ago, or not even 2 months ago, about a month and a half ago, um, we're going to see a peak. Uh, what day is this here? There, January 26th, and it'll take a good I'd say 3 days, just to be safe. 48 to 72 hours. We'll have that window of time to sell. And yeah, there's going to be different varying levels of where it is at a great high, a great level of, whatever it is, whether it's 10,000, 100,000, but it's going to fluctuate. Something like, let's just say $10,000, and then it goes down to, let's say 7,000, goes back up again, and then it eventually drops to way back down to 500 levels. I mean, we'll see. I mean, time will tell, but we're going to have a good window of time. I'm going to say at least 48 hours to 72 hours where it stays in that peak for a good while, and you can sell it off at really, really high levels. And at that point, it's such a beast that the hedge funds can't manipulate it anymore because they're forced to buy back. They're forced to cover their shorts. So yeah, that's all I have to say about GameStop. So once this squeeze happens, it's going to be a very, very hard thing to bring this beast back in its cage when it's just going to be slaughtering the stock market. And same goes for AMC. I mean, AMC and GME, both their prices are really psychological. Um, with AMC, their price was heading to 20 and probably 40. So again, this isn't really true resistance either. So everything I just said about GameStop also applies to AMC. They're the only two stocks of the meme stocks that really not just broke out, but maintained their levels of support. Not not just talking about the chart wise support. I'm talking about the hype, the people who've stuck with these stocks and have been loyal to them, who believe in their causes. Video game industry, uh, used games and just video games in general. They believe in Ryan Cohen very much and what he's capable of doing and his potential and what he's done in the past with Chewy and what he can do for GameStop in the future. So there's a lot of faith and trust in these in him in GameStop. But with AMC, it's also incredibly positive. Looking at the articles we just looked at regarding the boom with the cinemas, 500 600% increase and game AMC, sorry, AMC is back in business, baby. Like you got movies coming out, huge ones, literally huge. Godzilla versus Kong. It can't get bigger than that. I'm personally going to go back to the theaters just to watch that in IMAX. I didn't want to go back to the theaters at all. In only that movie, Godzilla versus King Kong, and whatever else I want to see is probably like the next big Marvel movie, like a huge one, like Avengers level, X Men, Fantastic Four kind of deal. But besides that, I'm not really going back to the movies unless it's like a blockbuster, tentpole event like Star Wars Episode 10 or something like that. But anyway, the point is, AMC, GameStop, you couldn't have a marriage of a two better companies in this movement. GameStop is really number one when it comes to video game retailers, um, and they may rival Amazon in terms of online later on if Ryan Cohen can steer the ship in the right way, and it looks like he's doing that. AMC is number one in the world in terms of movie theaters. No one tops them. So, I mean, can you really go wrong with these companies? And now you got the people behind them. You got Reddit behind them. You've got millionaires, billionaires. You've got hedge funds going long supporting this movement too. Basically, they're cannibalizing each other, the hedge funds. So, I mean, we're going to see what's left when the dust settles, where these stocks are going to be. But it's important to realize that, yeah, AMC, this peak here is not really a peak. That was manipulated. When they shut the market down, they prevented people from buying the stock altogether, which is completely criminal. And so $20, it's really closer to 40, $50. And then here, this isn't resistance either. This has been I was manipulated, as we know. But the support levels for AMC are similar to GameStop, where we can clearly see 550 up to $9 is really a support. Actually, I'm going to say 850 to 550 to $8 is the true support. True resistance, we really don't know where that is until we let the squeeze get close, and that won't happen unless people just hold. And that's why it's so important that nobody sells. We just hold it to our heart's desire till uh, until the point where it seems to be okay. Well, can't get close any more than this. And what are the levels? We're talking like in terms of GameStop, 500,000 now is the low point. Personally, it sounds ridiculous to me. I'm gonna just admit it live here on YouTube. But if I'm gonna be realistic about it, I'm gonna say like being really, really realistic, 10,000 is probably the low point, and the high point is probably 500,000. Yeah, probably that's probably what it sounds like a good level to me. 10,000 to 500,000. Yeah, why not? AMC wise, it's going to be, well, looking at the price of GameStop, if it's worth, 10 times more than AMC, then it's going to be 10 times less. So if we're saying 10,000 for GameStop at the lowest, then it's going to be 1,000 for AMC. And if we're talking uh, high point and we're saying it's going to be, you know what, it's not going to get to 1,000. AMC will not get to 1,000. Probably 100 to 1,000 is probably where it's going to end up, um, based on the squeezing, that kind of thing. But GameStop will go way higher. I don't think AMC will reach 10,000. 100 is still kind of crazy, but we'll see. 50, I'm going to say 50 is realistic for AMC, up to a maximum of maybe $500 per share. GameStop will definitely get to 1,000. 10,000 is also very realistic. 100,000 is getting kind of ridiculous, but 500,000, I'd say, I don't know about that for real. 500. I mean, we'll see. I could be wrong. I'd love to be wrong. I want to be proven wrong. Let's see if it goes to 500,000. It'd be such a great gift. So that's all I have for today. Uh, it is Sunday. Tomorrow is Monday, and I look forward to presenting this to you again in this format. And look forward to the news. I'm really excited for GameStop and AMC, and just looking forward to the continual climb because it's only going to get better when we see this quadruple witching hour or witching day, whatever they call it, for both. They're going to see not just GameStop and AMC go up. We're going to see a lot of stocks go up, but these two especially, like things will go up, but these are going to skyrocket. You're going to see stocks like Tesla and Apple could go up a little bit. I don't know, maybe. But GameStop and AMC, oh man, they're going to just kill it. And what I predicted with Tesla, going back to Tesla, I've been predicting this for the last month now, that Tesla will go down to, why is it not showing here? It's going to go back all the way down to, no, not that level. It's too much. Not down to that low. Tesla will go way back down to 330 to $500. And I say $500 just to be conservative, but if I'm just going to be totally real with you, and I like to be real, is 330 to 400, 450. 330 to 450 will be the lowest it'll hit, and then it'll shoot right back up. But it's going to go back to, I love the stock. I'm not trying to say this to doom and gloom, but it's going to hit, it has to hit bottom first. It's got to hit 330 to 450. And then only after that point, it's going to go back to 800, 900. It's going to go smash 1,000. It has to in order to reach to 1,000. It's not going to go and then go back to 1,000. No, it's going to hit the support first, because when those buyers come in, it's going to drive the price up like crazy. So we're going to see that go to 1,000 Tesla, but it has to go here first. And what I predicted is coming true, because when I predicted this, it was I believe it was at 700-ish levels, 800, 700, and I noticed that it was just stagnant. It just couldn't break couldn't break this resistance of 890. It eventually dipped to 830, and then as I predicted, it was around this level when I predicted it, and it went down to 700, hit lower lows, and then yeah, look, went under. It went under 600 for the first time in a long time, and even closed at 597.95. The last time Tesla traded under 500 or $600, that was way back in right here. There it is. Whatever date that is. It's hard for me to. December 3rd. So it's been 3 months. Just about 3 months now. It's early December, where it was trading under $600. So that's what I'm saying. This is the canary in the coal mine. It's showing us that the market is taking a dip, and it's going to eventually crash, only to surge back up again. So, I mean, that crash could happen next month in April. Around this time, I'd say beginning of April, something like that, or end of March. But anyway, if it doesn't happen in April, then it's definitely happening in the fall. So August, September. That's my prediction, at least. I could be wrong, but the market always crashes. It always does. And then after the crash, it always goes up. So, I mean, that's just a fact of life. It's like saying the sun will set and the sun will rise. So, yeah, this will happen. It's just a matter of when. So, anyway, that's all I have for this video. Thank you very much for your support, for the likes, subscribes, This is Apex Investor signing out. We'll see you tomorrow.